Treasurer Jim Chalmers today gave the biggest hint that the government is about to force big energy companies to pump more gas into the local grid to take pressure off gas and electricity prices. He spoke with our business editor Ross Greenwood at a Business Sydney event this morning, and Ross joins us now. G'day, Ross. So what's the political process here for this mandatory gas trigger to be pulled?
Well, it's really interesting, Kenny, because what happens here is that the government has got to get a report back from the ACCC. Now, the chair of the ACCC, Gina Cass-Gottlieb, was in the audience today and is very much aware of this process. So the government can't act to take pressure off gas prices until there is a recommendation that comes from the ACCC. My understanding is that that will come sooner rather than later. It's not a matter of weeks or months. It's really going to be potentially a matter of days. The second part about this is that the Treasurer laid out the options in front of him to try and take pressure off households and off business when it comes to energy prices. He said, number one, there's the prospect of, well, taxing big energy companies and redistributing that money. He says, yeah, maybe not. Also, there's a case of just the government giving out money, which, of course, the budget was not about. It was about taking pressure off inflation. And then the final thing is the gas trigger. So let's just pick up a little of Jim Chalmers at this Business Sydney event today.
The situation as we expect it to roll out can't endure. That's my starting point. It's putting too much pressure on Australians and on Australian industry, particularly manufacturing. I've spent a lot of time with manufacturers in the last little while. So if you accept that the situation as it stands can't endure, and that's my position, then you need to work out how can we do something meaningful here which respects the fact that there are international relationships at play, investment that's gone into the system, which is not irrelevant to us, but also how do you properly shift the needle so that some of these worst case outcomes don't eventuate.
Ross, does the Treasurer think the government has any other options to deal with rising energy costs?
Well, not really at this stage. I would suggest that is the key option that they have. Now, by complete coincidence this morning on the front page of Bloomberg internationally is a story about the United States and Joe Biden. So the president has basically said to big energy companies, you are making windfall profits at the moment as a result of the Russian war with Ukraine. And we, the United States, expect something of that back. Now, this is what Joe Biden had to say today about that.
Give me a break. Enough is enough. Look, I'm a capitalist. You've heard me say this before. I have no problem with corporations turning a fair profit or getting a return on their investment in innovation. But this is remotely what's happening. Oil companies' record profits today are not because they're doing something new or innovative. Their profits are a windfall of war.
OK, so if America is going down that front, what about here in Australia? A super profits tax on energy companies here?
Yeah, because you expect that maybe the UK and maybe even Europe will go the same way as well. Here in Australia, though, do bear in mind one thing, which is being put by energy companies vigorously to the government, and that is the corporate tax rate already here is 30%. And on top of that, there is a petroleum resource rent tax that they pay, effectively almost like a super profits tax, a royalty on the money that comes from oil and gas. So they're arguing, well, hey, you're already taxing us a lot more than what we would otherwise be taxed in other jurisdictions. So again, come back to the Treasurer, who really does think that the best option that they have is this gas trigger.
I think there is a pretty strong view in the community that we need to get a good return for our resources. And perhaps what people don't recognise is that the PRRT take did go up a bit in the budget, a couple of $100 million this year, a bit less than that next year. And I understand there's an appetite in the community perhaps for a bit more than that. But what we've said, a bit like what I said a moment ago, is that if you recognise that there are three paths, tax, spending and regulation, I think, at least in the first instance, that regulation is the area that offers us the best potential.
And all of this affects the Reserve Bank, so it's the latest interest rate decision that'll be in about 4 hours' time. What do you think they're going to do?
Well, this comes on in the wake of the inflation numbers last week, which were significantly stronger in the September quarter than anybody anticipated, 7.3%, and that was largely energy prices, which we're discussing now. That being said, the Reserve Bank surprised markets last month by raising interest rates by 0.25% and not by 0.5% as the markets anticipated. So today, it's interesting just to note the markets. You would expect them to raise rates by 0.25%. We can see here, say, for example, some of the market moves today. But if we go, say, for example, and move on to the ASX 200, what we can see there is that they have opened, and again, a little bit lower. That A2 milk is an aberration there. It shouldn't have jumped in there, but never mind. Anyway, markets are a little stronger today. The dollar relatively steady, around about 64 US cents. They could change as soon as that Reserve Bank decision is made. 2:30 Australian Eastern Summer Time. We'll have it live here for you on Sky.
Ross Greenwood, thanks so much for that.